Hello guys, glad to have you on board again today. We're not gonna make this one live for a simple reason. It's not that I don't want to, it's most likely because I think it doesn't really worth it, because that's a topic that most of you guys are very unexperienced, and in which you're very inexperienced, and I'm going to talk about stuff that you mostly won't know about, so I don't see any reason for you to be there live, which means asking questions or whatever, because most of the time I think you're not even going to ask any questions regarding what I'm going to be saying. Anyway, let's do this one not live, but as I don't know for sure, if you have any questions, don't worry, you can still send them to me right through Discord, and I'll be happy to answer those questions, obviously. But yeah, I wish somehow I wanted to make it this easy today, easy and fast. Recorded in here. So let's talk about this hot topic of automated trading, trading robots, all those shits. Let's make it straightforward. I'm gonna cut the crap in here, go straight to the essential. If you expect me to say the usual stuff like robots can be dangerous, whatever, all right. No, I'm gonna really explain you what happens, the goal in here today is not to say the usual bullshit about robots, that some robots are profitable, some robots are dangerous, whatever. I'm going to explain you why most of the robots are dangerous, because the problem setting behind them is more complex than you might think. Just because in here it's the same old psychological biases that make most available robots just pure bullshit. Simply because the people who created them are mostly not traders. So you'll figure out that it's at some point we're still talking about the same topics, because these topics is what makes most traders hitting the same wall all over again, but on different angles. Like, they face the same problem, they just don't think rationally, they just try to change the problem, not even figuring out what the problem is. They're trying to bring up solutions which are bad solution for a bad diagnostic. So the goal in here is that we start with the same old thing, the same old two new biases, because most of the robots you'll find out there are created by people still suffering from those biases. Therefore, anything they'll create will be tainted and biased, which means if you use any of those robots, you'll never be profitable, simply because the core informations, the ground basis behind those creations is not heading in the right direction. If you want to be successful in trading, there's just one way to make it. So people can teach you that way using different words, different methods, or stuff like that. But people who actually make it in trading, we all have followed the same fucking path. Like I said, we might call it differently, we might use different strategies and stuff like that, but we all came through the same old steps. And those steps are, first of all, fighting against those new biases, lack of patience, though impatience biases, and the fear of uncertainty, so the lack of control and the need for control. And this is the same old thing. If you're under those two biases, now let's go the wrong way so you'll understand the right way to make robots and eventually use them, because there's actually no yes or no answer to whether or not you should use robots in your trading. There are good ways of using good robots, there are bad ways of using bad robots, and the intermediate thing, like good way of using bad robots, will probably lead to bad decision making anyway, just like bad way of using good robots will not make you profitable anyway. So there's only 1 out of 4 choices that will make you profitable with robots, if you know what you're using and if you're using good stuff. So let's start with the basic. What's the difference between good stuff and bad stuff? It doesn't nearly depend on what's in there actually. You might think that what matters is the code. Like, the code is gold, and if you got the good code, then you got the good money. That's not how it works. Most of it, because the code is just a technical representation of whatever is in the people who coded its mind. So if the people behind it is not a trader, or it's not there's not at least one trader. Some algorithms have been created by groups of people simply because coding can be complex at some point and require more than just one brain behind it, or one hand to code it, and so one pair of hands. So I can really understand that people can group up to create a robot, and I'm totally fine with that. The thing is that any fucking way, they must be traders, because if they're not, they're going to be under the same old new biases, which means they're trying to conceptualize the market, to give it limits and stuff like that, as this is definitely not how it works. People trying to basically understand what moves the price, put it into patterns, and put it into code, and they'll think that this is as simple as that. This is not what it is. Like, patterns is an introduction to trading. That's why I still use those patterns, but definitely not the same patterns as I see out there in the simple codes I can come across. All right, so just give a quick example of what not to do. All right, so let's just try to pick a random strategy in here. I'm just going to scroll. All right, I don't know what that is. ANN strategy, let's call this one. All right, is it profitable or not profitable? We don't really know about it. This one is a pure lossing one. So anyway, let's try at least to find a profitable one. So at least you'll figure out what it looks like. God damn it, how do we... I think, yeah, it's deleting the shit. No way. Where has it been added? Alright, it adds in here. Alright, sorry about that. So, now new strategy. Alright, so, let's find another one. Marketplace add-ins. Oh, wrong way. Okay. Bollinger Bands RSI, the mostly globally used couple. Oh, damn it, this one is locked down. The guy must be selling that shit. That's great. So we'll get down this road as well. People selling strategies. And I'll explain you why those guys are making very bad stuff. Anyway, backtest data range, fractal breakout strategy. Damn it. Oh no, this one's positive? Great! Alright, at least, well, this one is pretty shitty anyway, but let's at least have a look at something that is supposed to make money. Now let's see the code. If the code is public, yes it is, great. Alright, so is this the kind of strategy you want to put your money into? No fucking way, alright? Because what's the problem with this? Alright, I'll let you think about it for a second. Remember about all the new biases I told you about earlier and stuff like that. Alright, what noobs are doing when they get to be confronted to trading, they generally tend to make things simple so they can understand it, because the bias is they try to understand, so they try to have something they can control. Simple stuff, so it seems like it's easy, but the reality is that the more they'll trade with those easy solutions, the more they lose, simply because we're not trading what is simple. We're not trading what is understandable. We're about to trade fucking chaos. So the goal in here, the only thing that brings money out of trading is fucking risk managing. And risk managing is anything but black and white. It's just anything like that. It's all about the shaded grays. So it's subjective analysis, it's complex stuff, and if you want to make understanding shaded gray areas to a fucking code, then it requires a lot more than 50 code lines. That's the conclusion we'll get down to, but I'll give you the arguments to get there, alright? So this, any way you can put it, doesn't work. Simply because, anyhow, it will never be a good risk management. What am I calling risk management? Simply this. How much do you risk for the gain you're expecting to get? Which means it's all about that. I know it may sound simple the way it is, it's way more complex than that in reality. That's what I tend to call the risk management stuff. So if you want to teach risk management to a robot, alright? So be aware of one thing. There's no robot more efficient than human to risk manage. There are some, but they are in different places, and we're going to talk about them in the latest part of this thing, alright? The market makers robots can definitely be way more efficient than real traders, but they deal with much different things than you do, all right? So let's keep that for later on, all right? Let's now talk about just retail robots, the robots that you can code or someone else can code, the robots that can be sold or whatever, right? We're not talking about the professional robots. So which robots do actually make money with good risk management and stuff like that? Robots that has been coded by traders, all right? So traders' mind who have knowledge in code that will code complex stuff that will not the best way, but a decent way of risk managing. The thing is that with a good robot, you can just let it work, all right? Which means if you're smart enough to understand that letting a robot works requires at least real traded money for a significant amount of time, then if you can understand that, you're definitely much better than most people. Because what most people do with robots is that they have a look at an equity curve, which is most of the time back-tested. And let's be honest, we're going to talk about back-testing right now because that's a huge problem. Back-testing in those structures or platforms, all right, it's just bullshit. All right, let's go straight to in here. I'm not going to go down some crappy explanations or whatever. This is bullshit. So when you're backtesting a strategy in here, what you are going to get in return, if you really have been exposing this market in the previous candles, then you would have had a different outcome. Many reasons. First of all, rollovers. They're not calculated at all, which means holding a position has a cost, all right? This cost definitely not priced into the backtesting, all right? So if you're backtesting your stuff and you say, oh my God, over the latest 10 years I would have made $20,000, great. Maybe you would have spent $10,000 in commissions or stuff like that. So trading is not free. There are spreads, there are costs, there are commissions, there are rollover, there are expiration on some contracts, so lots of things going on. Lots of most complex stuff that most of the time people don't nearly give a shit about. That's a huge problem, all right? So those calculations, those real calculations are far from being expressed into the backtesting. So anyway, the platforms are working on it, so the backtestings we have nowadays are both definitely closer to reality than the backtest we've had years ago, all right? I remember when I was coding, getting down this road myself years ago, all right? Like trying to find a suitable strategy to fight my own impatience and stuff like that. So very bad way of approaching this thing, though obviously the robots I created back then, what I'm going to tell you about right now, I lived it, all right? I don't invent that. I've been down this goddamn road. I've been losing quite some amount of time and energy trying to build automated strategies, simple ones, as I wasn't a trader back then. I was still learning goddamn trading at the moment. I was a scalper, but the problem is a scalper is definitely not a trader. A scalper is just like a robot that is using a structured trading, but you don't nearly understand anything like risk management when you're scalping. It's when I got to switch to intraday trades that I got huge problems about risk management. And at that moment, I had the early stupid reactions you guys have as well. I thought about, God damn it, impatience is my problem. I need to code my strategy and stuff like that. I was still trying to figure out what the goddamn market was doing. I was heading in a very wrong direction. I lost significant amount of time down this road before I actually figured out the solutions. The solutions I explain in here as well. Those new biases lead you into a very bad position because either you will think that coding your own strategy is a solution to your impatience problem, waste of time. You can try it, all right? Like I know anyway, I give you guys, I tell you about stuff not to do because you're going to waste your time out there, but I know that any fucking way you don't listen to me and you do it anyway. So do your own experiences, but if you get to face some problems down those roads, I hope that at some point you're going to have a little voice popping up your head and saying, oh, God damn it, I knew it, Phil said it. So I wish you'd just stop the shit earlier rather than circling around the same old shit and losing time and energy, and most of the time losing money in the meantime as well. So trying to automate simple strategy, I can understand that you want to do it. I really can understand that. Like I said, I've been down this road as well, so I know how tempting that can be. But those solutions are easy solutions to a very, very more complex problem. And first of all, you really would like to understand that problem. The problem is you, right? The problem is the vision you have of markets and the vision you have of making money in the market. That is totally wrong. You don't make money because you understand market. Most people think it that way. They think the guys who make money in the market are the ones who understand how the fucking market works. I told you, that's bullshit. I don't understand a goddamn thing. All I understand is that if you play risk managing, you'll get money. So risk managing is what you need to figure out. Definitely not what the market is and how it works. Just how the fucking risk management works. Risk managing is understanding how people make the difference between this trade and this trade, because every trade is different, they all have different risks, and what people tend to do when they begin is quite the opposite. They try to find simple solutions, like black and white answers, like if this and this and this happens, then buying will make me money, and if this and this and this happen, then if I sell, I make money. That's exactly fucking wrong way of seeing the market. All right? You don't black and white buy and sell because of simple conditions. You must have complex patterns with at least 5 to 6 conditions. That's a strict minimum to have a very, very low risk limitation. Just giving you a quick example, all right? Remember the strategy rules I give you, all right? Like price filtering, 80% prices of out the table, all right? Like you remove at least 80% of prices. You make a strict Fibonacci to have a risk-reward ratio in there, and you wait for at least reversal structure, which is just a momentum pattern, is at least 8 conditions. All right, so I could make it easier, obviously. There's no problem with that. You can use easier patterns on momentum to trigger a range trade, but still, all right? Anyway, you get something close to 5 to 6 condition on the overall. If you try to make it simple, it's going to be something like that. 5 to 6 condition to have a decent low risk trade, all right? But low risk means low rewards. Like I told you, the range trades, they're great, but the problem is they don't bring that much money. Simply because that's how it is. Low risk, low amounts of rewards. Low risk, low rewards. And people tend to believe they can get high reward with low risk. God damn it, that's not how it works. You want money, you'll have to take fucking risk. If you take risk, you better have to manage them. And the problem is, if you think you can risk manage like a pro, being a noob, then no way. So it's way more complex. Like I told you, the way I risk manage is way better than the way you do, simply because I'm way more experienced than you are. But the problem is, you have to work yourself out of here. So either you do, or you somehow think that a robot can do it better than you do. But believe me, if you create that robot, and if you don't understand risk management, you can try as hard as you want. What you'll create will never be profitable. In the long run, what's important is that you really need to figure out that. It's not about, is it going to work for a couple months, for a couple, or eventually a couple years? Is this, can I sustainably put my money in this robot and let it trade without concerns of someday being broken? Or at least taking a huge and significant drawdown on prices, on returns. Like, that's great. If you make 10% a year, every year, just to end up with a minus 80% someday, then you lost money. You simply lost money. And that's exactly what happens. What I care about is how much money you made until the day you got in and the day you got out, with a long period in between. We're talking about 10 years to 20 years, all right? Because if you want to let the money safely stowed into this thing and being profitable each and every month, that's fine. But if you want that, with a simple robot, you can't get anything more than 5%, in which you reduce the taxes, you reduce the position fees and stuff like that. All right, so 5% profitability strategy minus rollovers, minus taxes, minus inflation, minus a lot of stuff that you don't nearly understand, like the hidden risks or whatever, all right? So all of this makes that actually you're not even making money. You're just maintaining your level of wealth. It's simple as that. 5% doesn't make you richer. 5% is just maintaining, all right, the current stats. Because if you reduce the fees and taxes and stuff like that, you're barely going to pay inflation. So 5% doesn't make you richer. 5% just sustains you at the same level. All right? Though the problem is life has a cost, which means you need to make money. You must not just sustain the level you currently were, because you have any way to spend the money to live. So you need to be profitable. So 10% is, I would say, a minimum to start being, to start having money that you can spend without touching the capital itself. All right, so starting 10%. The problem is, for a robot, 10% is also is already splitting between two gamers. All right, the first gamers is, in order to get from 5% to 10%, the guy who coded the strategy has been using more risk-taking. All right, so he's been getting into tougher patterns or stuff like that to provide better risk-reward ratio, which means for the same amount of risk, the strategy with 5% and the strategy with 10% will have double the risk-reward ratio. All right, let me explain that. All right, so let's call it that way. The easy strategy I teach you, the range trade, all right, let's assume that it has an approximate risk-reward ratio of 1 to 1.5, all right? So you're risking 1 to expect 1.5, though it's actually the opposite. Generally, we put it that way, all right? The reward first. No, sorry, yeah, it's 1 to 1.5, all right? So that is low-risk strategy. These, they don't bring anything more than 5% a year, all right? No matter how hard you try, they cannot bring that much money because there's not a limitless amount of assets you can trade and stuff like that, because those strategies cannot be applied everywhere, all right? And anyway, 1 to 1.5, all right? Now, if you just take more risk, you double this to 1 to 3. 1, all right? You're risking 1, and the average return is 3 times the risk. That's great, but think about risk managing, all right? Think smart. Stop thinking about it like an asshole, like, God damn it, this one is much better. I can make twice the returns. Yes, that's fine, but it also means the strategy is riskier. It means, yes, you're risking 1, so the risk is the same for double the reward, but the patterns you're using in there are riskier, which means you rather like to unrisk them, to balance the risk. And how do you fucking balance that risk with a robot? Think about it for a second. This is all about it. That's the problem most fucking retailers are doing. They don't think like a trader. I see risking rewards increasing. You want more money, then you're taking more risk. Though, how do you fucking manage those risks is what I care about. Is what I'll do. I see opportunities, I immediately assess the risk level. I see rewards increasing means the risk is increasing as well, because they always go as a pair. And if you think it that way, you start thinking as a professional, all right? Higher risks, though immediately, how do you manage that risk? I told you the problem is, the higher you get to a risky strategy, the deeper you get into risk managing. The harder the risk management is, the more it's about shaded gray areas, subjective analysis, experience. Though, how do you want to be more profitable without the experience? That's just not a match. So, how do you get a robot to be experienced? So, some people have got down some dangerous roads, thinking that we can use machine learning and stuff like that to make robots profitable, and to teach themselves, so to give them the tools to be taught all by themselves how to risk manage. But the problem is, I mean, I've seen those robots like appearing day after day, new ways to approach the market, new revolutions into robot trading and stuff like that, like neural networks and stuff like that at work at one thing, trying to understand the market, because the guys behind it are just assholes who try to understand the market. That's the problem. As long as you get the wrong diagnostic, you get the wrong solution to the wrong problem. It's simple as that. Or you get the good solutions to the wrong problem, but it ends up the same way. You can make neural networks or whatever shit that is working hard to try figuring out how to make money in the market. You just get it all wrong. You don't make money as long as you don't risk manage. Though what you should be teaching your fucking robots is how to risk manage. Though instead of searching very, very, very complex pattern, you should teach them how to filter out simple patterns. Patterns cannot be more than 10 to 12 conditions. Any more than that is just as stupid as it can be, too much variables, too much uncertainty. I can give you that sweet spot. I've been taking years to get there. The good strategy is that riskless patterns, low risk patterns must be between 5 to 7 conditions. Intermediate risk patterns are generally between 7 to 10, and high risk patterns are generally 10 and plus, but no more than 15 conditions. Anything higher than that is just a waste of time. What brings you more profitability is to multiply the number of those patterns and to filter them out. You need to counterbalance the risk, because the problem is, and I'll highlight this with this is something I'm currently working on. So this is just a back test I've been building in here, but it explains pretty rapidly the processes I tried to highlight in here. So think about these things not as just great opportunities to make money, all right? Try to stop thinking like an asshole. Try to think like a risk manager. And that's exactly how it goes, all right? The red squares are the riskier patterns, all right? Which means when they work, they bring shit ton of money. The green patterns are the less risk ones, all right? When they work, they bring a little bit of money, and when they fail, they lose big, all right? So they generally lose as big as they can provide, or at least a little bit more positive, 1.5 to 1, all right? And you've got the yellow ones, which is pretty much the intermediate patterns, all right? So now think about it more than anything else, all right? Just make, in here is a bad example. Normally you've got a little bit more of those ones than you have green ones. So, no, anyway, let's make it different, all right? So let's think about it. You're a beginner. So this is something I'm working on, all right? So this is alpha stuff. Don't make it any more complicated than that. This is just illustrating something that I hope you already know by now. All right, when you're unexperienced, meaning you can barely handle a little bit of risk taking, because if you take any more risk, you just simply can't handle them. So that would be 3 trades. All right, 3 possible trades, and even with those 3 possible trades, you wouldn't nearly have traded all of them. All right, now you get intermediate, which means you can trade the beginners plus the intermediate stuff. All right, now you get 4 trades. All right. Get a little bit more opportunities, but you need to be a little bit better, because this trade is trickier. But sometimes this trade will trigger those ones, which means if you don't take this one, you'll take no gain. Right? And if you get experience, then you're basically tripling the amounts of stuff that can be interesting. But now let's be straightforward. All right? Let's make the usual dumb analysis. All right? Like biased reading. Let's go down this road. All right? You would say, oh man, the strategy, you managed to pick that fucking market up. Oh great, because, oh man, that's really precise. Man, that is good trade as well. Bam, this one, and this one, and this one, and this one, and these ones, and this one. God damn it, that strategy really understood how the market reverses. So this strategy must be crazy fucking profitable. All right, then now what happens with them? All right, go fully loaded in here, put a large stop loss, and you'll lose a shit ton of money in here. All right, this one probably will be fine anyway. These ones are wrong trades. All right, and now this one, all right? Balance the information, all right? And now think about it for a second, all right? Though you would say, all right, if I sum up the information, then actually these patterns are bullshit, because if I trade all of them, I must not make money, or at least not that much money. Well, that's fine. You're starting to head into the right direction. Now you're figuring out that the riskier the pattern, the more the wrong signals you'll get. Meaning that even if they have 1 to 3, and it's more than 1 to 3 in here, all right, those patterns are really bringing a lot of money when they succeed. They also cost you not that much when they fail. They cost you 1 to bring 3. The problem is you'll have many false signals. So now, how can you teach that strategy? Like, think automatically, all right? Think robot trading. Robots, unlike humans, cannot understand subjective analysis, all right? They don't do that. They do black and white. They do binary choices. Though what you can do is change a binary choice into a shaded gray choice. But anyway, the robots, when they see shades, all right, Like when you put a gradient into a color, all right? Let's make it that way. Considering at that line, all right? Okay? I'm going to delete these things just to make it a little bit clearer. I'm going to move to another price area. All right. So let's consider it that way, all right? We're considering a shaded area in here, gradient of color going from there to there, all right? So we start red and we want to finish white, all right? You barely see the white, but that's no big deal, all right? So we can use shaded grays in between, all right? In here and in here. You're getting brighter as you go to the right side, all right? How much shades you add depends on how much complex the algorithm is, okay? Because you can make it simple. Just like I told you, you take one at 50% in here, and you basically say, all right, and you teach the algorithm, when you've got these conditions, you go there. Simple binary choice. If you don't have them, then you go there. The simple if then this, else that, all right? Then there are multiple ways you can teach your robot to put some gradients, some shades in here. You say, if go there, else if you go there, else if else if You give 5 options for this robot, which means out of one question, you can give 5 different outputs. You're starting not to be black and white, all right? But the problem is, this is still black and white solution, all right? It's first we test that condition. If it works, then we go there. If it doesn't, we try this one. If it goes, if it fits the rules, we go there. If it doesn't, we go there, and then there. So it's actually a followed suit of condition. It's a series of simple black and white conditions that creates shades. If you start to understand that, you start to understand how to fucking code things. Which means, if you want to be precise, having multiple shades, all right? Because the more shades you have, the better you are at risk managing, the closer you are to reality of making money into trading, which is all about risk managing. Not black and white, not even if, else if, all right? You don't want 5 conditions. Trading is way more than that. They are just like a risk management for every trade. So that's the reality. You must not, you can't go down this road. So you have to risk managing chaos. You have to Gaussian curve. You got to normalize that stuff, which means the more precise you are, the better you risk manage. All right? But like I said, the more precise require more condition. So it's an endless stuff, which means if you go down this road, there's no limit. The only limit is the time you'll spend to make that algorithm. All right? The problem is, if you do it the wrong way, trying to understand the market moves, you'll probably build something that doesn't really will be efficient. All right? The problem with risk managing, and what I'm going to teach you out there took me years to figure out. All right? So if you're a coder, all right, and I shouldn't nearly give you this because that's something I really took a long time to figure out, and that's pretty much most of the value in my indicators is that I don't see the market this way. I don't teach my indicators to do if, else if, else if, else if, else if, else if, else if. I don't give them a set of combinations, of binary choices to make. I don't do that. What I do is that I teach them this pattern, this pattern, this pattern, this pattern, this pattern, this pattern, sorry, this pattern, 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 this pattern. And then I'll tell them, if you've got this and this and this and this and this condition, that's fine. But if you've got this and this and this, then don't trade that pattern. All right? If you've got this and this and this condition, that's fine. Trade the pattern. If you got this and this and this, don't. All right? So I don't do a lot of else ifs. I do a simple binary choice out of many patterns. And that's what makes the value. That's how you get to trade, actually. You don't try to make things overcomplicated. This is where the thing is complicated, because the condition for patterns, like I said, 12 conditions, between 5 to 12 conditions. 5 for the low risk managing structures. And like I said, there are shaded grays in each and every arrow. I've got arrows that toughly risk manage. All right, I've got arrows that do it less. I've got very, very bright arrows as well, right? With very limited risk taking and stuff like that, right? You start to understand the way I do feel the markets. This is what my strategy looks like. Many patterns, and each and every one of them has degrees, all right? Which means I know the risk taking for the strategy is that, but I've got things that will teach them if they can be applied more aggressively or less aggressively. Sorry. All right, so with that pattern, I can have either I don't trade, or I don't at all, or I trade with a lower risk managing, a lower risk taking, right? Tinier position sizing, or broader stop loss, or whatever, or I can make it more aggressive. All right, so either I cancel the trading, or I trade the same, I trade a lesser amount, trade the same amount, or I trade a bigger amount. This is what risk managing is about. Each pattern has multiple ways to be exploited. It's not black or white. Otherwise, it will be way too simple. All right. So, like I told you, I can choose not to trade. I can choose to trade with lower leverage. I can choose to trade with the same supposable leverage, or I can choose to trade with a high leverage. Do you start understanding how this thing works? I hope you do. All right, because that's how it goes. All right. I can choose not to trade, lower leverage, higher leverage, same leverage or higher leverage on each of those patterns. Like I told you, I've got approximately, how many patterns are in framework? So the patterns we have in here, though, we've got the range trade, buying, selling. So it's 1, 2. Well, I'm going to go easy, all right? I'm going to just take the bullish side. So we've got the bullish entry on the neutral range. We've got the bullish entry on the neutral bullish, on the bullish range. We've got a bullish entry as well on the bearish range. It's a kind of trendy trading, all right? So 3 range trades just for the bullish side, all right? So it's actually the double, right? So then we've got bullish accumulation, bullish breakout, bullish divergence, bullish pullback, bullish final excess. So it gets 8 structures, all right? Multiplied by 2 because we just took care of the bullish ones, all right? So 8 structures, 8 patterns, all right? No, actually 16, all right? Not counting the breakout information. We're just talking about the context, all right? So 8 patterns for framework. The breakout patterns, they are at least 3 because you've got the range breakouts, the standard breakouts, you've got the reversal breakouts. I don't see if there's anyone in there. We've got them on weekly. You know the diamond signals, all right? The thing is that you might thinking as a 3 outputs. Yes, that's fine. But in order to trigger this thing, I've got like 6 patterns to get to this conclusion, approximately as well for this. So it's a shit ton of patterns. Just in framework, there's approximately 60 patterns, upside and downside. So now we haven't even talked about this thing, all right? When I give you the set of patterns in here, that's fine. You think about exit, taking profit, whatever. That's fine, all right? That's a number of outputs. The thing is that to get to those outputs, I've got crazy fucking numbers of patterns. There are approximately, sine wave and momentum combined, all right, because those two are filtered together right now, approximately 250 patterns, all right? So yeah, that might sound crazy. Yes, it might be, but that's how you risk manage with a robot. That's the thing. I need you to understand that those things are years of experience, all right? Teaching experience to a robot doesn't make it anything more complex than that. Because the higher the risk taking, the better the robot will be at assessing those shaded gray areas, even if any robots is meant to be doing this in the first place. You can't teach shaded gray areas to a robot. You can only teach them black and white and a series of black and white solutions to get to assess something closer to shaded grays. That's the reason why I can teach that to a robot, all right? I can teach this area to a robot. Multiple patterns, with each patterns having a different risk managing, all right? These gives you the different outputs, all right? Consider these ones with the tight risk management will be exits, all right? So I got many exits patterns. I've got taking profits and all right, that's it. That's the replicate. This is the most important part of this. This is what you guys do, all right? The indicator assists you in this, but you make the choice of either not trading, trading with less leverage, trading with normal standard risk managing, or make it more aggressive. You make those choices. And this is what makes the entire difference, all right, between someone who's going to be a gainer and someone who's going to be a loser. Let's understand that. Let's put it in motion. If you decide you want to go fully aggressive in here, all right, let's say it's a tight risk managing pattern and you want to be fully aggressive on this one. Bad shit happens, this is the one that takes your stop loss. All right, fine. So you get exhausted and you decide that, all right, the next time I'm going to be far less aggressive. All right? And this one makes the money. All right? But if you were trading 3 times the leverage on this one than on this one, you just made no money. Which means in here, as you lost 1, all right? But you lost 1 3 times compared to this one. So even if this one provided you the gains, you got 3 on this one, but you lost 3 on this one. You made no money. So what actually makes the difference is how you balance those informations. Teaching the first set of shaded grays to a robot took me 4 to 5 fucking years. So can you imagine how much it will take to teach my algorithms how to decide whether to be more aggressive or less aggressive with each fucking patterns? It's doable. It's yet very complex, but it's doable. So can I automate my strategy? Yes, I can. Can this strategy provide very significant numbers of returns? Yes. Now let's get to a conclusion. How much do you think that may be worth? How much do you think that can bring? Because I don't know for sure, but I can give you approximate numbers because I've been going along this road for long enough. I've been seeing more than enough robots elsewhere, and there are some good robots, definitely. All right, I can tell you how much I could make without leverage using. All right, so still the same money management as I do trade on a day-to-day basis, low risk per trade, but multiple trades. All right. I think automated, my strategy couldn't bring anything more than 25 to 30%. It will probably come along with a 10 to 15% drawdown, though it's a very good strategy. Do you know how long it would take me to do this, to make it a fully 100% automated strategy? Probably another 5 to 10 years. I'll eventually do it, but I don't nearly think it actually worth the thing. I personally, doing this shaded gray area assessment myself, can be way more profitable than the robot. So why the hell would I go down this road? It's not a waste of time, but I think my time can be much better used elsewhere, either teaching you risk managing or doing other stuff I care about doing. I want to do something else with my life. I don't want to spend my life trying to code something that just brings 30% rewards with a limited amount of risk taking, which means 30% bringing compared to the 5% robots we talked about earlier is 6 times better at risk managing. But think about it as an exponential, all right? Each and every time doubles the risk, even if it's not even more than that, all right? So it's not just squared, all right? It feels like for 1 risk, all right, you take 1, a level of risk. To manage twice that risk taking, sorry, let's go. I'm not going to make it this way. You're not going to get it. All right, let's figuring out as a... So this is profitability, all right? Or no way, we're going to make it different. So this is profitability with 100% automated strategy. Let's take it 5% mark, 10% mark, 15% mark, 20% mark, 25, 30, 35, right? This is the amount of work and complexity within the algorithm to risk managing these yielding increase. All right, this is the reward. To double the reward without taking more risk, the curve is purely and fuckingly parabolic. All right, so you want profitable automated strategy, you're gonna have to work freakingly hard. But personally, what I really got down to over the latest years is that I found my personal limits. I just decided I'll never do it. The 100% automated strategy, waste of my time, pure and simple, because it requires a shit ton amount of work just to slightly increase the profitability. So now make it simple and smart. How do we use the good set of which strategy for which trader's profile? Let's start with the most convenient one. You've got more than 200K, you've got a comfortable capital, let's call it a minimum 200K, and how much do you want to make each month? Let's think about it. Yes, we all would like to gain double, all right? We would all like to get 10K per month to be really wealthy and enjoying life, whatever. Money doesn't make you happy. We all know that, but for some reason, people tend to believe it's still better to be richer. So, no, it isn't. It's just if you can be comfortable enough, do you really need to be more comfortable? Like, I mean, do you really need to have a Jaguar, or a car is just fine, right? All right. So at some point, you really need to think it that way. Do you need to show off your wealth, or do you just need to be wealthy enough to be having what you want to have? What you need to have, not what you want. All right? You always want something bigger, better, more expensive or whatever, but at some time you don't necessarily need it. It's not rational needs, it's irrational needs. So make it rational. How much do you think you need? And just make it rational. If you can afford it with a 10% annual return, then why the hell would you go anywhere beyond? Because, let's call it that way, you've got 200K or 500K, a 20% return is more than enough. 20% a year. You bring out the taxes, you bring out the stuff like that, you'll still be having more than enough money to have a decent fucking living without working. So you can spend your entire fucking days enjoying yourself, or painting, or drawing, or whatever. I mean, you cannot even try to make any cent out of trading if you have 200K and 20% returns. Now, that's fine. You really want to code your strategy on your own because you want to gain your own money, then that's fine. It's going to take you years to, first of all, learn risk management, because you'll never be coding decently without understanding that fucking thing. So it's at least 3 to 5 years to get to learn trading, then another 3 to 5 years to code that shit, and you'll eventually have a 20% profitable strategy that you built with your own hands, but you pretty much have spent 10 fucking years to get there. And that's the best case scenario, in which you learn straightforward without losing time and energy, and you've been coding efficiently as well, right? Which requires additional knowledge. You need to learn the goddamn languages, the programmation structures and stuff like that. So it takes a lot of time, and I don't think that time really worth it. So think smart. You've got humans that can do such level of profitability. That's the basic hedge funds or whatever, all right? These guys behind their desk can provide you 20% annualized returns. They don't take too much risk if they know what they're doing, all right? Which means, why the hell would you lose 10 fucking years? Instead, I suggest you go for a classical fund investment. Don't take a risky one. Don't try to pick up the one that brings you 50% annualized return, because this one sooner or later will basically put you out of money. So that's not how you go. Take what you need, make it smart. And if that's 20%, then a human can do it. And it's a regulated stuff, which means the guy behind the desk is not an asshole that came out of nowhere on YouTube and just created its magical algorithm 2 months from now. What many guys are doing in here, the guys you'll see in TradingView selling their shit, they basically ended up learning trading probably a year or a year and a half ago. These guys will never lead you where you want to be. So what you see out there with their supposed to be profitable strategy is that you see what you want to see. It's definitely not going to end up this way. What you see is this. You see an equity curve like that, all right? You see something like that and you like that. You say, oh man, the guy's great. He's making 25% a year. But if the code lines behind it is just asshole risk managing, you'll never get there, because what will happen next is that probably this. They've been piling up the risk will show up, create a significant drawdown, and what you'll do is what most people do. They get in the fund in here, they start making a little bit of money, they say, oh man, that's great, I can be rich without doing anything, I don't even have to learn risk management, that's magnificent. All right? And then what happened? The shit hits the fan, the guy gets desperate, it just goes back to reality. Oh man, actually it wasn't that simple, maybe there's something I don't know, so as I don't know, I get out. All right? I thought I understood, oh, I just figured out I don't, so I take my losses, bam, that's great, first loss, you got in at the top, you profited a bit, and then you ended up broken. You still have money if you're lucky. If you're really unlucky, meaning the higher the curve, the sharper the drop can be. And like I told you, if you reach out this line, means no money. Means, all right, you're out of order. Goodbye. It was happy. It was nice having you into trading for a little while, even if it ended up in blood. You should have been smarter than that. So that's exactly how it is. Everyone tries to go down these roads because they just want to be richer. It's easy to imagine that you can be richer. The reality is that any fucking way, reality will catch up on you, and sooner or later, the risks you've piled up will definitely show up. So, not good, all right? If you take those 25% curves, which is an average, all right, that can be a good robot. But question yourself, who the fuck made that robot? Is this the asshole who just came over a few weeks ago or a few months ago, who don't nearly understand anything about risk management, who's just there for 2 years and prior to that it was like, I don't know, selling cars or whatever? Do you really want to give 200K to those guys? No fucking way. You'd rather like to put it to someone who's been working into finance for a decade, who's got graduations and stuff like that. That's the kind of guy you want to give your money to, all right? For a 20% fucking return, I don't see any reason you risk take with random robot strategy available in the web. Go for a fucking professional, all right? And now, if you have even more money than that, all right? So let's call it 500K or more than that, all right? And a 10% profitable strategy can give you enough money to live with, all right? Then that's fine. If that's it, then the same stuff. Why the hell would you go down using a robot? Why don't you just go see a professional that takes even less risks? Or you go for bond tradings. I mean, with bonds, you can get those 10% returns with far less risk taking. So be a fucking bond trader instead. So that's exactly how it is. Just make it rational to your personal profiles. The problem is, when we go down the road for most of you guys, you don't have that much capital. Most of you have less than 50K or even less than 10K. So 10 to 12% to 20% returns, it's not possible. So you want more, all right? That's great. But remember what I told you earlier. The more you want, the harder the risk the risk managing is, though the toughest the work to get to automate such rewards is. So be rational. Either the guy behind that will have crazy fucking amount of work to get to achieve a profitable robot without too much risk taking that can get to 25 to 30% rewards. And I would say anything on top of that is just so much energy that I don't think it's nearly worth it. I don't really think it's worth it. It doesn't worth the time. So anything beyond that is just stupid. Yeah, I just said that. Any strategy who brings more than 30 to 40% profit a year is an asshole behind it. Or it's just a risk taking that you'll never figure out until it actually blows to your face. So yes, you want to make money. That's fine. Do it. You'll learn it the hard way sooner or later. And it took me years to figure this out. It took me real years. I don't want to go down the automated strategies simply because I know this doesn't work unless you spend shit ton of time. So now let's talk about those robots that can make more than 30 to 40%. But if you think about it, think like a risk manager. If they can make more profits, means they can manage more risks. So how can they do it? How can they cheat the risk managing rules? They don't cheat. They simply have more information than you do. These are the market makers, pure and simply. So the market maker is not a bad guy, he's simply a guy who has deeper and stronger information than you have. Let's think about it. What informations do we have, you and I? All right? We basically have nothing but prices, their historical movement through time, and volumes. That's all we've got. We can build a shit ton of complex stuff out of here, like those volume profiles, the momentum custom indicators. We can build beautiful trend channels, whatever, right? These are just derivative from those information because we have nothing else than that. The best we can have, aside from this, damn it, is this, right? We can have access to order books for 10 lines, and we can't even see whatever the fuck happens in those 10 lines. That's all we can see. Now, what the market makers can see on the opposite way is you can see much deeper than that because you've got infinite book, and he has information about the stop losses. All you have in here is limit trades. You can't see the stop trades. The broker can see them. So, understand that. It's as simple as that. The market makers have way more additional information than you do because they have infinite depth of market with limits and stops. They can study how this thing works at a microsecond. But the thing is that, do you really think in there a human is efficient? No. Think about that. Robots. In which things are they better than humans? To compute a shit ton of information. This is where they're far more efficient than you'll ever be as a human. You can't process that much information. Or we actually do process a shit ton of information, but subconsciously, and if we were able to, if we were able to access all those information, we would just be crazy. All right. So in order to be safe and sound, we need to process most of those information subconsciously. All right. We'll keep that subject for another day anyway. It could be an interesting one, but not going to go down this road today. So, the computers can sort and deal with crazy amounts of information without causing any second negative effects. The only negative effect is that just consume more electricity and create heat. That's simple as that. That's the counterpart of multiple processings. That's it, all right? Complex processing just burns more electricity more than anything else, all right? You can't process that much information, otherwise you just go crazy, all right? So what's the difference? What's your pros and cons? You can't process endless information. You've got a limited amount of processes, all right? You're limited in your processings. But you can process stuff that the algorithms can hardly do. You can process shaded grays. They can't. Because like I told you, processing shaded grays is a freakingly parabolic structure. In order to perceive the shaded gray into a sharper way, into a more precise way, it requires a shit ton of computation. So, do you really can afford a computer capable of this, who's consuming more electricity than you can actually pay the bills for? No, you can't. But the market makers, they can. They don't need to give a shit. They're dealing with billions on a day-to-day basis. So they definitely do it, creating highly complex algorithms in a way that neither you or I can even imagine. I can barely imagine how complex that is because I've never seen them. These algorithms, there are 7 or 8 in the entire fucking world. And the guys who've been building this are the most crazy assholes on earth. These guys make 7 to 10 years of crazy mathematical studies. They are the best. These guys are autistic persons who are geniuses in finance. So these guys live from another world. They don't see the world just like you and I do. These guys are aliens for finance. So they're just a couple of those guys, a few of those guys who actually end up create those algorithms. They take years to build them up. And they generally are flushed out years later, because one algorithm is replaced or updated years ago by another quant and another guy and another guy. So they always evolving. They are always evolving to be more complex. Okay? That's how it is. That's the reality. Those algorithms, you can even make a hundredth of their complexity. My algorithm, it's like a fish in the sea compared to what they do. But that's the deal. They're dealing with billions. They've got endless capabilities. They've got the smartest minds on this earth to do it. So yes, and they have more information than you do. So yes, these guys can be profitable anyway. Yes, they can, because they have different informations and much more resources than you'll ever have. So yes, these are the robots that works. These are the robots that started being built 10 to 12 years ago. They're working full regime right now, and they're getting more complex. So yes, you think on your smart ass of retail traders that you can play with the same grounds. No, you can't. There will always be years ahead of you, any fucking way. So at some point, do you really want to compete with stuff you can actually ever imagine you can compete with? Or you just say, alright, maybe my human skills are still profitable nowadays. I still tend to believe that in the future, it will be absolutely necessary to combine the two, which means I think already today it might be the case, like assistance by computers, but humans' decision still remains, and I think for at least a few more years at least. It's not something that's going to change in months. I think anyway, you rather would like to learn trading rather than wasting your time searching for easy solutions. And even if you think you want to go down this road of creating your own algorithms, your own automated strategy, then just be fucking smart to think that first of all there is a long and painful hard work to get through first. Learn the goddamn risk management, and then be aware that it takes years to build something that actually will work. So does it really worth it? I would say that's your own judgment to do, but I can tell you something. You have to put an end to this because it's endless, and you don't want to waste your life doing and working around an algorithm. So you've got multiple choices. Either you let some professionals do it, all right, to assist you in trading. Just like I told you, I provide assistance. I've been working years and you can use my work. Yes, it has a price. It's not for free because it's experience, and it took me years to get to build those shits, all right? You don't want them, or you don't feel like you need them, or you can't afford them. No problem with that. No one will force you, all right? You can still learn risk managing without my tools. You can still trade without my tools. You can still learn trading, so no problem with that. But please make it rational. Thinking about trading assistance is great. I think it's a smart way of seeing things. But thinking automated trading, if you're a non-experienced trader, then that's just probably the very wrong diagnostic. So you really should think smart. What you really are dealing with is your lack of patience, and you really want to work this one out instead of thinking that the robot is the solution to your problems. It is not. It's not. It's a false friend most of the time. So think smart, go the right way, and don't forget that anyway it takes time, but there are no other options. I think for now, and as long as it is, your most your biggest ally is your fucking brain. Your brain will be way more efficient than any of the robots you'll come across out there. Most of them are just pure beginners bullshit. Like things they created to have fun and see if it works. If you're stupid enough to put your money in there, you'll figure out sooner or later that it doesn't. Oh shit. This is no war, it's just exercise. I don't know why we still have that shit in France, but anyway. So, yes, your best friend right now is your brain. So try to teach your brain how to associate gray areas. It will be way faster than trying to teach something that you don't even understand to a robot, because what you do in here is fighting your good old biases. Right? Most of the robots out there are people doing those mistakes. They can be good at selling them. All right? They can be good at selling cars, but these guys are definitely no traders. All right? They're sellers. They're sales guys. So yeah, they might be putting big colors, advertise the stuff, tell you that it works, show you that it's great. This is just not a mindset of the mindset of a trader. So flush out those guys, flush out those strategy. It's a waste of time, energy, and most of the time, money as well. All right? You want an automated strategy, then take it from a trader, and you'll actually figure out sooner or later that all the good traders don't have automated strategies. So if we don't have that, why the hell would you try it out? I tried it out. I figured out it's a waste of time. I'm not going to do it. That doesn't mean I'll not do it a few years from now. I probably partially automate my strategy. Like I said, I'm going for semi-automation purposes, certainly not fully automated. It took me years to figure it out. Though either you can trust me, or you can think that, all right, maybe I am the asshole and you'll be right. And like I said, don't take what I say for granted. If you want to try it out, do it. Just make sure that as you'll circle around the same problems all over again, just remind yourself, think about what I said, and maybe you'll figure out that, God damn it, it was right once again. That's exactly it. You want to figure out the problems all by yourself, then go along with it. I have no problem with that. You want to test it out. Just make sure that you understand that when you go down these roads, the more you play, the more you lose. So you can be winning at the beginning. There's no problem with that. The shit will hit the fan sooner or later because risks can be hidden, but they always go down the light. And the problem is, if you go down this road, the only thing you can do is just take less risks. You know it's risky because I warned you. So anytime I warn you, all I care is not you not going down this road. If you want to test it all for yourself, I'm fine with that. I would even recommend you doing the mistakes. But if you do that mistake, be aware that you just don't put your entire fucking money out there. You want to try a robot because you thought it was great, then be smart. Think about what I just said in here. It's probably a false friend. It's probably dealing with your impatience or your greed or whatever. It's playing with your guts, and you don't want to be doing those decisions. But if you still want to do it, just to see how it works, then yes, do it. But just put 10% or 15% of your capital in there. Just don't put it all in there just to figure out in the end that you shouldn't have done that. All right? You want to make your own mistakes, then do this. But please, risk managing when you take risks, because most of the time these are risks you simply don't see. These are risks I see because of my experience. So I just warn you about the risk. And if you've been listening to me for long enough, you're probably figuring out that anytime I teach you something, even if you don't like what I say, I'm always right. Not always, but most of the time. And when I'm right, means I understand stuff you don't. It's simple as that. I'm not doing magic at all. Not at all. Nothing is magic. It's just work, hard work. The harder you work, the better you are. It's simple as that. So yes, I've been working hard for years. I've been going down the mistakes you probably go down as well. It's just I worked myself. I crawled myself out of this. It's simple as that. I'm just trying to teach you how I've done that. So yeah, you want to go down the same roads, you probably will. Just try to be more efficient than I was. It's simple as that. It's the only purpose of my work in here. I'm only doing this to save you the time I wish someone helped me saving back in those days. Simple as that. That being said, I wish you guys a pleasant experience with trading robots and stuff like that. Don't waste too much time nor too much money and too much energy. If you want to do it anyway, then do it, but you'll figure out sooner or later that I was right.